Yeah, so let's write.
And then you need more, and then go more of these dollars to get 1 euro, and it goes up.
Okay, so what gave you that information?
The US dollar per euro.
Right here, right? So if we think about what that's saying, if I write that up into words,
87 cents.
87.96, okay?
Dollars.
For
No,
1 euro.
That's the opposite way.
So it's kind of the interpretation of what that means. So as I'm reading that on the screen, I've got
That's false, though.
$0.8796 dollars per euro. That's what the screen is saying, correct?
That would be.
So it takes 87
That's
cents.
false,
87 cents to buy 1 euro.
Promise you that's false. Because I was
Oh,
there.
it's like
It's
one-
never been below one.
That's not that, yeah.
It's like 1.5.
It's 1 cent. Yeah.
Okay.
Yeah, well, I mean, I know
What do you
it's
want?
like 1.5.
Current
$1.5, yeah.
exchange rate. There it is.
So we have it up backwards though.
That's what I'm saying.
1 US
Dollar
dollar
equals 0.91 euro. So we have it backwards in there. The way we're reading it, it's 1 euro is.
So what's this one saying?
0.91 euros.
$1 equals 0.91 euro. Right? So it's 0.91 euros per dollar. Would you agree with that? So it takes 0.91 euros per dollar. This one says dollars per euro.
Could you go back to that?
Okay. So this is the last, so this agrees here. The last one, I just changed it to whatever the most recent one apparently is, 0.91. So if we wanted to express it in dollars per euro, we've got their calculator handy. So this could be restated as how many dollars per euro? 1.0989. So it takes $1.10 to buy 1 euro. So
Since the has US dollars in black and then the 0.92 is in black too, they're trying to portray it that way. But dollars per euro, this is how many dollars.
how many dollars?
I think it's more so portraying, like, it's because you have the graph and it's in orange, and it's saying this is how many, wherever you are on the graph. For example, in January 2011, it was a little bit over, 0.75 euros per dollar. So it's just saying purchasing power. That's
Yeah.
more so what it is. It's just a graph. Purchasing power.
So they've
Half a dollar, like if it was if you have $1, that's how many euros. It says currency.
yeah, which is really, still in euros per dollar.
They were like giving that.
Yeah, Yeah,
Yes,
I agree. They
wrote it back.
I don't know what exactly their reasoning is, or if this is just,
I was
like you
told
said, this
that,
is
yeah.
implying something different,
Yeah.
right? I mean, the data's the same, but yeah.
You have US dollars, what it that has the check, and then so the orange line on the graph is not the euros, you have that one.
Yeah, probably. Yeah. But it's kind of ignoring our normal math notation, yes, of dollars per euro. Okay, so they also do this in terms of the percentage change. Maybe. Yeah, this is it. And has gone up and down, so we start to see some of the volatility over time of how these things can change. Of course, we have financial crisis time frame. I guess that's before, because this is just a 5-year look. But some of the fallout of the European countries, Greece and other countries on the euro. Now we can also add in, the thing I liked about this is we can click in another country. And actually, I want to go back to the rate. So there's the British pound. A little more stable. So back to my original question then, now that we've got this figured out, is this appreciation or depreciation of the dollar with that going up? Yeah, so against the euro, let me just X out the pound for now just so we don't confuse things. So appreciation, depreciation of the dollar. Appreciation. So we've got more compared to less. If we go back to thinking how many euros does $1 buy? Well, it used to buy 0.87. Now it's buying 0.91. So it's getting more euros. You're buying more. So that's an appreciation of the currency when it's expressed this way. And this is one of the things that gets confusing with exchange rates. Why it's kind of important to look at how they're being shown is because they'll flip them on you. Currency traders tend to, and some different textbooks do it differently. Dollars per euro is a lot of times the convention that's used, but it goes both ways. But a lot of times so you got to be prepared to think through which way it's being shown. All right. So let me go back to kicking on a few more here. So Canadian dollar. Let me put the old British pound back in there. And there's your Aussie, Australian dollar. So, good news for your trip or bad news?
Good news.
Good news, right? Yeah, if you're getting more Aussie dollars, for every dollar you're giving up, you're getting more Aussie dollars, assuming they don't have some sort of crazy inflation going on, that it's actually offset, your exchange rate benefit is offset by inflation, and that's part of what we'll talk about. But I know Mary Lou has been struggling with you guys with your costs, trying to get everything arranged, and things are running pretty tight, is what I've heard. All right, so let's go back to the rate, or the percentage change. So here's 0%, that's kind of our benchmark. And then over this time frame, we had appreciation, depreciation, so it kind of quickly goes from percentages. We can get real tight. There's 7 days. That's in percentage change. And let me go to right back to rate. So, a lot of fluctuation over 7-day period? No, not so much, right? Well, I guess I could show you that. I got it on the 7 days. So not too much variability to worry about in a fairly short time horizon. All right, this site had these, this thing was pretty cool. Oh, showed it a little bit differently on my other computer last time. Oh, it's still loading. Well, here's the US dollars. This thing's collecting data on live exchanges every second. And it's collecting it, so when it goes gray, it's retrieving data, and when it comes back, it looks at all the trades that took place that last second, and it went up. And it's going up by, thousandths or hundredths of an amount each time. But I had never seen, I didn't know we got to this point where this was open to the public like this. But this is what traders do a lot. They're sitting in front of those screens like you've seen on TV shows, and they're watching small changes in currency if you're a currency trader. I thought this was pretty cool how it's updating all the time with the live stuff. Questions or comments as we go, just kind of yell them out. But the green means up, of course. Red means down. Let's see, where was that other cool thing that I did? I want the candlestick graph. Where did I do that? Currency converter, maybe. Live, I think it was under live exchange. I want to show you this. It had the, because I'm going to actually talk about it a little bit. If I can find it. Global exchange rates for business. Sorry, I didn't think I was going to struggle this much with it. It must have been on the historical. It was really freaking cool. So I'm willing to hunt. Look for anything that says, oh, you know what? I know what it was. I clicked one of these. That's what it was. I think US dollar. Let me pick the euro or something here. Okay. Yeah, here we go. Okay. You guys know what the candlestick business is about? Seen that? I remember Max did this for entrepreneurial or something. Some class, Max did the investment stuff. Oh, by the way, I totally forgot about that. I meant to tell you guys that before. He texted me. He's working at American Century.
Yeah, do we get a extra credit one?
There we go. No, this is relative to class, and on the, I call it, this is, let's see, what the heck was this? I don't know if I need to do this. Oh yeah, thought you guys would appreciate this. Let's see if I can get this thing in here. So this is his investing book. Get it focused in. Maybe it won't, but
Is there a contrast button on there?
I had it really blown up small. This was in his highlights, so he sent me a picture. He took a picture of this that I'll read you the text in a second, but It was the exact same stuff that we had just covered last week with Freddie and Fannie and Ginnie Mae, and then money market stuff. And this is his highlights and notes. And then he said, how many videos did we watch in your classes about this? And did I read you this already about the open the license? Just completed my first day at American Century. This was from the 23rd. At American Century, we are studying for our licenses for 3 weeks. I opened the license and securities textbook, and the first thing inside it was the good old supply and demand elasticity curves. Made me laugh and greatly appreciate your classes. Ha ha. So it's being used out there in the real world, you guys. This is not all a bunch of puff and smoke. All right. I thought that would hopefully be inspiring to keep working through. Okay, so candlestick. This is on seconds, by the way. So this was at 10:10. This is live today, so this is at 10:20. This is at 10:15. The top of the candlestick shows the high trade that currency did in that minute. So 1 minute worth of trades, that was the variability of the high and the low. And it just updated. When the candlestick is green, the bottom fat part of the candlestick shows the opening price for that minute, and the top part shows the close. So that was the opening and close and the spread in between. And so all of these show minutes. Of course, you can do the candlesticks for the day's trading and look at a stock. So this is done with stock, all kinds of financial instruments for trades. But the top part is the high, the low. The fact that it's colored red means that the opening was here and the close was here. So this currency is going up. This minute it's going up, down, and so this is all within a fairly narrow margin. Look at where we're at here on the scale. 1.1024, 1.1030. So these are all kind of microscopic changes that are going on a minute-by-minute basis in the currency. Okay, questions or comments there? What's that?
What does the width mean in the middle?
The width doesn't mean anything, but the height is the open and close.
What's the fat part?
The fat part is the, so at 10:10, when it opened, the currency was trading at the top part of the fat part, and at the close of the minute, 59 seconds later, it closed here. And so then in between that minute, somebody bought it here, and somebody else bought it here. So it was that was the spread within that minute of time. That shows all the trades, the total variability during that minute of time, and then that was the open and close. And then it just continues on to the next minute and the next minute. And so you can, of course, choose the time periods. I don't know if this one allows me to make this by the hour or something like that. Doesn't look like they have it as a option. Oh, and here it kind of says, I didn't pick up on this before. Updated every minute. This is the high, the low, open. So this is what it opened at, the high, the low, the close. And that's what sets the candlestick. And it's either red or green depending on if it went up or down.
So like on that one, it will move on there now. It
Yep.
didn't go any higher than the open, if it's going lower than the close.
Right, and that, yep, so there's no,
Because it didn't go up.
yes, there's no little stick above, so it never went above the open. It just fell the whole time. And apparently, yeah. Now, maybe for this minute, I don't know if there wasn't much trading, or it was just all, it was just a downward momentum all the way down, and it just fell completely. And it was probably still falling. That's what happened here. It rebounded up. Somebody paid a little bit more, but then it continued to fall.
So like at 10:22, it opened with a minus, and then it went down, all the way down, and then it sold for what it opened at, basically.
Here?
Yeah.
Yes. Yep. somebody went down here, and then it's green, so it went up a hair, but it almost got back to where it opened at. Yep. So kind of a cool visual to kind of quickly give you data. And so again, those currency traders are staring at those things all day long, and they're trading stocks and other securities as well. Okay, any other questions there? All right. So what's causing all this movement? All right, so let's start off with a couple definitions. Black.
What chapter did you say this was?
20. Yep. So we got just 20 and 21 left, folks. 1 month, almost done. 2 chapters, 20 and 21, and both are related to international foreign exchange markets. So, okay, so the exchange rate, which I usually just go with a little e, which is actually I might even add in here the nominal exchange rate. I'm going to talk a little bit about the real exchange rate because I think it helps motivate things, but I noticed your text doesn't really get into details about the real exchange rate. But we'll talk a little bit about it, but not put too much emphasis on it. So the nominal exchange rate is simply the price of one currency, the price of one currency in terms of another. And the foreign exchange market which I don't know if this was proprietary or not, but the 4X, I don't know if that's one person's kind of special acronym, but foreign exchange, kind of the foreign exchange market, you'll see that online. So this is the financial market. Financial market where exchange rates are determined, where E is determined. And we have a spot transaction is a transaction that occurs in a fairly short time frame. So your book says, I'm just kind of following them for your notes and stuff, immediate, which means today. That usually is not the immediate we're talking about, but immediate exchange of bank deposits. So time to actually make the trade. And if you just jump in and when you guys are traveling in Australia and you go to a bank and you say, hey, I need some Aussie dollars, that's the spot rate that they're giving you. Today's rate is the spot rate. Well, the spot rate is the rate on that day. Otherwise, we get into forward transactions that we spent some time on with the last material.
So, like you said, do a lot of exchanges with foreign currency. Do they look up the spot rate by hour, or do they just look it up for the day and post it so all their tellers know at the time?
Yeah, they'll have a time. Usually, they'll probably set it for the day, and they always have themselves a little bit of room with the bid and the ask so that they make a little bit of money on it. There's kind of a service fee that they charge internally when they set their rate. So you can go to different vendors and you'll get different rates. And when I was in India, Pastor NJ had a connection with somebody in this downtown area, and he gave us a better rate because he knew Pastor NJ. So I mean, it's negotiable on what that rate is. But they're gonna use the big marketplace. You know, that's where ultimately they'd have to dump it if they need to go. So they're gonna keep their eyes on that, but they'll probably set it for the day. And a lot of these will end up being pretty stable. All those changes that we saw, remember, were in fractions of cents and fractions of pennies, real small movement. So on a given day, it might stay the same for a week or 2 weeks, and then there might be a small adjustment in one direction or the other.
Also, in terms of like scale, I also found, because I found to People's and one in Commerce, Kansas City,
Yeah.
and People's, not only did you have to purchase, like you had a transaction fee for the actual exchange, but then the rate that they gave you was like additionally, it was on top of whatever they paid the UMB, because that's where they got their money from. And for Commerce, it was just like, oh yeah, we're just going to give you like the government rate plus 2%, and that's it. It was like,
So some of the banks are more heavily into currency than
Yeah.
others, and they kind of specialize it. Like you say, they've chosen to kind of specialize in currencies, and then I kind of learned that for the first time because I bank at People's as well. So they wouldn't take my rupees when I came back from India. I had some left over, but I went to the People's in Overland Park, and they did it for me right on the spot because I think they were close to UMB or whatever. They have it when they do their currency, so they did it for me on the spot.
When I came back, it was like, I didn't even go to the place I banked because there wasn't any around, but like through interest, I was back like close to home. But like there's quite a few interest banks, like there's like 2 or 3 in Wichita and Laredo, but only their big, huge branch in Wichita was the one that would like actually do it on
that
the
deals
spot.
with the currency.
Because otherwise they'd like send it in and like bring it back.
Yeah, because they literally will mail the currency, or by courier. They might have internal courier service, but they're literally spending gas dollars to transport the currency from one branch to another branch, and so that's part of the processing fee that they add on to it. All right. Any other comments there?
How it works out.
What's that?
It's just interesting how it works out.
Yeah, it is. It's interesting to think about the actual process of getting the currencies into different places.
So is it better to exchange here in the States before we go to Australia, or wait till we go to Australia to exchange?
Usually you don't want to exchange at the airports because the airports will rake you over. Although I found out the airport had a pretty good rate relative to what People's was going to give me because of the transaction fee.
Because it's so much higher.
Because of they at the airport they deal with a lot of currency volume, so that they don't have the courier. And I learned the same thing when I came back. I didn't really think about they have to spend money to ship it around.
Can it be just as good though in the country, like once you get out of the airport, like in Australia?
Oh yeah, I think so.
Just as well as
Yep.
Oftentimes, it's better to find like a bank versus an actual company that will give you like that specializes in currency transactions.
And that's what the one group was that we went in.
Yeah.
That Pastor NJ did. So.
But then if you have extra rupees or euros, you want to exchange them on back to US dollars while you're in the country.
That's what I wish I would have done. It would have been easier because I had transportation costs driving up to Overland Park. I mean, I did it on another trip. I didn't make a special trip up there, but literally, I'm spending potentially $4 in gas to get up there to exchange $10 worth of currency. It's like, well, this is stupid. And so, you gotta think about those.
I think maybe not in more developed countries, but like say America compared to the less developed country. In America, it's probably going to be a set thing no matter where you go. Where in other countries, they do a lot of bartering and negotiating, so you might be able to get
In general, I've always just did it where I traveled to. I don't know if I have real good, Mary Lou's done a lot more of that than I, so I would lean on her. But usually, since you're traveling with a big group, everybody will say, oh, I need some currency, and you'll kind of all, make the trip over. And either way, you're not going to get burned too bad, big time. At the airport. Well, when you're dealing with a big group too. So you might want to check into converting it here before you go, and then it's done. So. Good questions. All right. So forward transaction. This is the exchange of bank deposits. Exchange of bank deposits at a specified future date. And that gives us the forward exchange rate. And so you can go on and look at the 30-day rate, the 60-day rate, and there's traders, as we kind of did in our Chapter 15 material of forward contracts. That's essentially all you're doing is entering into a contract for that fixed amount to hedge your risk if there's changes. Okay, let's see. I want to make sure you got in your notes appreciation and depreciation. So appreciation is a rise in one currency's value relative to another. Okay, so I'm going to put a little note with this. Depreciation will be the opposite as all, probably right there. But when we think about the dollar, if considering the dollar and you want an increase in E to equal appreciation. So if you're, since I like to kind of keep it characterized in the currency. I was happy to see that this particular textbook does it that way too. So if you're considering the dollar and you want an up arrow E, like we saw with that chart, as that number's getting bigger, if it goes up from $1 to $1.10 or 1 to 1.1 or to 1.2, what goes on top, what goes on bottom? So if you want to do this, then how does E need to be specified? Foreign currency on top or dollar on top? Which one do we want? So if this climbs from 109 to 1.2, did we have appreciation? Or if this one climbs from 0.91 to 1.1, did we have appreciation of the dollar? The right one, the left. So here it takes 0.91 euros to get $1. And if it now we get $1 gets us 1.1 euros, that's better for us, right? So there's been an appreciation in the currency. It's always this mental gymnastics, so that's what I'm trying to kind of get you all to kind of buy into that. Sometimes you just have to write it out for yourself back to kind of this type of writing. 0.91 euros per dollar. If now we get 1.1 euros for every dollar, that's good for me. So it's appreciated. So then E needs to be situated as foreign currency over dollars. And maybe I'll put US dollars here just to for Aussie dollars and other things now that we're getting in foreign currency. So if you rate that way, now you're going to get this going on where up arrow means appreciation, and we don't have to do mental gymnastics because it's completely equal to. But then up arrow means depreciation for our currency. So you kind of got to go back and forth. All right, so depreciation. I'm going to put vice versa. There's our official definition. Depreciation. Okay, so that might even be worth an example here. Since I got these numbers. So, example, suppose E equals 0.91. And get in the habit of this notation will make your life easier. Of 0.9 what? Euros per dollar. Suppose the exchange rate equals this. If, and this was in 2014, if E in 2000 time period 15 equals 1.1 euros per dollar, then $1 buys only 0.91 euros in 2014. Therefore, up. Depreciation of the euro. So again, it's good to keep this in mind, and one implies the other. Depreciation of euro. Now that's worth an extra credit point, Michael.
It wasn't just me earlier. I wasn't the first person to ask.
Okay, do a little rust busted. You can just pass one sheet around the horn. All right, so one of the most important concepts in international trade to reckon with, I think, is purchasing power parity. Purchasing power parity. PPP. Well, I better silence it before I get rusted again. Okay. So parity means what? Purchasing power parity. We talk about the NFL having parity in the league, and the Big 12 had a lot of parity in basketball this year. What does parity mean?
Close to even.
Close to even, right? Something's kind of even. So now we've got purchasing power parity, and we're talking about purchasing power of an individual and looking across countries. Purchasing power parity. All right. So the way I like to think of it is that the same, two identical goods in different countries should cost the same after we adjust. The price of the good expressed in whatever currency it's in should effectively be the same. Why? Why would we predict that in economics, first of all? So take a good, how about thumb drives here? So this is a 4 gig, I think. Yeah, so we got a 4 gig thumb drive. My prediction as an economist would be that one of these things in the United States should be priced the same as it is when you guys travel to Australia in terms of Australian dollars after we adjust for the exchange rate. Why? Arbitrage. So we're back to that fancy word of arbitrage. If they were, after adjusting for the exchange rate, if it turned out it was $10 in the United States and we apply the exchange rate to the dollar and I can trade the dollar into Aussies and I go run to the Aussie Staples store and I buy a 4 gig for $2, 2 Aussie dollars, then I could just package this thing up, send it back over to my buddy in the United States and open myself up a little thumb drive store, right? And make millions. Well, that does happen, right? There's people out there looking for those profit opportunities to do that. And so what's going to happen over time is that those prices are going to equalize, which is the same prediction we have in econ, why we don't have a thumb drive in Ottawa that's a fraction of the price of the one up in Lawrence. Because then you would people would travel to Ottawa and buy it, or you'd buy it in Ottawa and resell it in Lawrence. That's arbitrage, right? The thing that's kind of weird here is that we're dealing with exchange rates. And so now we're going to convert the Aussie dollar. If that thing was 12 Aussie dollars and it was $10 in the United States, the equalizer is going to be the exchange rate. So the E is going to be the thing that's going to fluctuate to effectively equalize the cost of those two goods. It's also referred to in that context as the law of one price. But it's the exchange rate adjustment that takes place that's purchasing power parity. And we will...
I was going to say, is that ignoring like cost of shipping and production ability?
Right, you need to take that, yeah, exactly. You take that into account, kind of like what we did with the currencies, that there might be some transaction costs that we need to take into account. Yep. All right, so planning to do